Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again on the euro currency. So you can see yesterday market has shown the pullback from the lower border of our consolidation that we have considered and decided to use for possible taking the short positions, because we are watching for short-term bread butter sell trade around this confluence resistance. It's 102.70, 103.60. But at the same time, euro still has chance to proceed higher, just because not everything depends currently on the technical situations, because we do not know precisely what the solution and decision will be from the central bank. So if it will be 25 basis point shifts, definitely euro will drop. It's because partially, I suppose at the high degree of the probability, the 0.5% change is already priced in. If it will be 0.5%, maybe some more hawkish comments might follow from the Christine Lagarde, and actually it also might push euro slightly higher. It's just because currently market is not at the rebuttal on the daily chart, and it has room to keep going higher. So on the lower time frames we have mixed signs. We have some bearish signs and at the same time some bullish patterns as well. So that's why it will be really difficult solution, a decision currently to be made, whether to take position right now or wait for a final moment and then make the decision. So on a lower time frame, on the follow time frame chart, take a look. Market stands in the confluence resistance. Follow time frame trend has turned bearish, and actually that's another reason why we talked about 103.60. It's just because this is lower border of this large triangle consolidation, so should be also work like the resistance. At the same time, guys, we have the similar action on all other currencies. So for instance, take a look at the Great British pound. Market is turning down from the leg line that we discussed recently, with forming these head and shoulders, which also suggests the pullback. And the same type of action you could see on the New Zealand dollar and Australian dollar. All currencies actually are turning to some technical minor pullback. Dollar index is also stands overextended to the downside right now on the daily oversold, and which means that also chances for a pullback exist. But the one tricky moment that we have stands on the hourly chart. At first glance of this performance that we see, it might be treated as a bearish in terms that market really could start downward action right from there. It's just because market completed the COP, right, and the agreement is 102.70. The reasons in favor of the possible starting downward action stands with this recent performance. So take a look. We have the upward acceleration forming the ABCD type of retracement, and that theoretically should be the actual continuation of this trend, because COP is minor target, it's just 618 extension. Acceleration to the COP was relatively strong, and theoretically it should not show any deep retracement. And in fact, this type of the ABCD pullback, it's more than enough for this COP. But currently, let's take a look what we have. This upward action reaching the first 618 level, forming bearish reversal bar. This is not big scale, this is hourly chart, guys, but still this is bearish moment, and theoretically we could suggest that market could start moving down as well here. The complication factor here is that, take a look, we have the bullish divergence. So the situation, as you can see, very tricky. And this is one of the situations where we usually call for considering splitting the position. So for instance, at this moment, since short-term trend turns bearish, downward action here has started. This is first retracement. You could think about taking 25-30% of your position if you would like to take a short position in general. If indeed central bank will make the decision for a 0.5%, euro currency will keep going higher. In this case, you could consider the second entry with the major part of the position around 103.60 area, around next resistance, and actually OP that we have around the same level. what else comments we could make. For instance, if we calculate the extension here, you could see that 1618 extension stands approximately 103.40, and we suggest forming some head and shoulders or something of that sort. So it's really might be that this might become the left arm of the larger pattern if once again central bank will change rate for 0.5%. So but as I said, as you understand this, we do not know, because if it will be just 25 basis points, the drop starts right from there. So if you're ready to not get to miss this trade, it's no problem. Just wait for higher standing levels, wait for more hawkish decision from the central bank. This is also the option, the scenario that should be respectable, since because you're just trying to get it as fine as possible. But if you're not sure that you could get it there, or you do not want to miss the trade in general, so one of the solutions that might be used here is the split the position and consider taking some minor part around this area. So if it will be 25 base point shift, in this case you will get at least 30% of your trading volume, you will get the bread and butter of this trade, and this will be also a good result. So that's actually our view currently on euro situation.